Good morning, everyone, and thank you for choosing financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 20th, 2023. Economic challenges weigh on global stocks. Global stocks faced a decline on Tuesday as the second quarter rally encountered resistance from economic headwinds and signs of overbought positioning. In Europe, the chemical industry led the downturn, with Lanxess AG experiencing a significant slump of 15% due to a profit warning. This decline dragged down shares of BASF SE and other industry peers. On the positive side, drug maker Sanofi recorded notable gains following a favorable arbitration ruling. Meanwhile, the absence of Wall Street trading on Monday contributed to the decline in U.S. contracts, and the Asia-Pacific Shares Index also registered a fall. Balancing FOMO and market concerns. Investors find themselves in a challenging position, torn between the fear of missing out, FOMO, on potential gains and concerns that the markets may have advanced too rapidly. Overblown valuations and economic headwinds add complexity to investment decisions. Citigroup strategists highlight that bullish positioning in U.S. equity futures reached its highest levels for the S&P 500 and Nasdaq 100 since 2010, underscoring the heightened enthusiasm in the market. Uncertainty surrounding U.S. monetary policy. The path of U.S. monetary policy adds another layer of uncertainty to the market landscape. Federal Reserve Chair Jerome Powell's upcoming semi-annual report to Congress on Wednesday holds particular significance. While interest rates were left unchanged at the latest Federal Reserve meeting, policymakers issued warnings about potential tightening in the future. Investors are eagerly awaiting the outcomes of policy meetings in Turkey, the UK, and Switzerland, as these events will provide valuable insights into global economic conditions and policy decisions. Discrepancy between market expectations and Fed forecasts. A notable discrepancy exists between market expectations and the forecast provided by the Federal Reserve. The recent Fed decision projected higher borrowing costs of 5.6% in 2023, suggesting the potential for 2 additional quarter-point rate hikes or 1/2 point increase by year-end. However, market pricing suggests a more conservative estimate of approximately 20 basis points of tightening for the remainder of the year. This divergence raises questions about the timing of the tightening cycle and casts doubt on the likelihood of rate cuts in the near term. Impact of other market developments. In addition to the key factors influencing the markets, several other noteworthy developments took place. U.S. Treasury yields rose following the trading break on Monday, while oil prices declined due to skepticism surrounding China's plans to support its economy and reignite demand. The surprise replacement of Alibaba Group Holding Limited's chief executive and chairman caused substantial volatility, with the company's shares ultimately trading about 1.5% lower on Tuesday. Global stocks faced headwinds as economic challenges and overbought positioning tested the second quarter rally. Investors grapple with the balance between FOMO and market concerns. The upcoming semi-annual report by Federal Reserve Chair Jerome Powell and policy meetings in key countries will provide critical insights into future monetary policy decisions. As uncertainties persist, market participants must navigate the evolving landscape with caution. Stay tuned for further updates on the latest international financial and market news. Today, let's shift our focus to China, the world's second-largest economy, and delve into the current state of its economic performance. Contrary to earlier expectations, China is facing a series of challenges that have raised concerns among analysts and investors. China's unexpected economic situation. Back in January, when China abruptly abandoned its zero-COVID policy, there was both excitement and worry among analysts. The sudden revival of the massive economic engine raised fears of increased inflation, leading to speculations of rising commodity and oil prices. However, the reality seems to be quite different. Rather than stoking inflation, China is combating potential deflationary problems domestically. The country's consumer price index has risen only 0.2% year-over-year, a relatively low figure. In contrast, its producer price index has plummeted by 4.6%, indicating significant downward pressure on prices. These disappointing economic indicators have prompted Wall Street banks to revise down their growth forecasts for China, although their projections remain optimistic compared to China's own target of around 5%. Challenges in key industries. The challenges in China's economy are evident in key industries. Despite Saudi Arabia's unexpected production cuts, oil prices have been sliding, primarily due to weak demand within China. The country's demand for steel is also projected to decline, leading to lackluster iron ore prices. These trends indicate a slowdown in economic activity and a potential drag on the global economy. Before we continue with our analysis, we'd like to remind you of your support for our channel market briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Potential measures to boost the economy. To address the current economic challenges, China's central bank has already started implementing rate cuts. Analysts also anticipate the introduction of fiscal stimulus measures to stimulate economic growth. These actions demonstrate the Chinese government's commitment to supporting the economy and mitigating the impact of the current downturn. Future outlook. While there is a possibility of a turnaround, with rate cuts and expected fiscal stimulus, China's economy still faces significant challenges. It remains to be seen how the country will navigate its economic landscape in the coming months. Analysts and investors will closely monitor the effectiveness of the measures taken and their impact on China's economic growth. China's economic performance has deviated from earlier predictions, raising concerns among analysts and investors. The unexpected challenges, such as potential deflationary pressures and declining demand in key industries, have led to a slowdown in economic activity. However, with rate cuts and anticipated fiscal stimulus, China aims to revitalize its economy and overcome these challenges. The coming months will be crucial in determining the success of these measures and the path of China's economic recovery. Stay tuned for more updates on global financial markets. Some of the main moves in markets. Stocks. The Stoxx Europe 600 fell 0.4% as of 10:10 a.m. London time. S&P 500 futures fell 0.5%. Nasdaq 100 futures fell 0.6%. Futures on the Dow Jones Industrial Average fell 0.4%. The MSCI Asia Pacific Index fell 0.5%. The MSCI Emerging Markets Index fell 0.9%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro rose 0.1% to $1.0935. The Japanese yen rose 0.3% to 141.51 per dollar. The offshore yuan fell 0.3% to 7.1823 per dollar. The British pound fell 0.1% to $1.2779. Cryptocurrencies. Bitcoin rose 0.1% to $26,749.34. Ether fell 0.3% to $1,725.38. Bonds. The yield on 10-year treasuries advanced 3 basis points to 3.79%. Germany's 10-year yield declined 3 basis points to 2.49%. Britain's 10-year yield declined 3 basis points to 4.46%. Commodities. Brent crude rose 0.8% to $76.67 a barrel. Spot gold rose 0.2% to $1,954.31 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.